Welcome to Business Venture Exchange Africa, powered by IAZ. We're here in Livingston during the Insurance Conference 2017. My name is Faith Chitulangoma. Very happy to be on the program today with the Commissioner of Insurance coming all the way from Ghana in West Africa, and that is Mrs. Lydia Bawa. Mrs. Bawa, welcome to Business Venture Exchange.
Thank you for having me.
Thank you for coming all the way to Zambia to attend the Insurance Conference this year. And we're talking, and what we would love to learn from you as a Commissioner for Insurance in Ghana is about the regulatory framework and the lessons that we need to learn as a region and as Zambia from what you've experienced as Commissioner.
Yes, thank you, Faith. And as part of the developmental agenda of most developing countries and emerging economies, we are rethinking regulation and the management of the financial sector. And insurance is a very important component of the financial sector. Before now, we had the compliance approach, which was we set rules and regulations and laws to guide the insurance sector or the financial sector, and that we assume that once you complied with these rules and regulations, then our objectives of having a sound and stable and safe financial sector, which includes insurance, will be achieved. But experience has shown that this isn't the case. Even with these rules, we still have challenges. So what do we do? Now, instead of setting the rules, we realize that we need to look at the insurance companies, identify, because before now, they didn't have any good risk management procedures and processes of managing their own risk, even though we manage other people's risk by assuming those risks. Within our companies, we didn't have any good procedures for identifying and monitoring and controlling this risk. So we had certain inherent risks. We do underwriting, credit, investment. We were not controlling this. We're not even identifying them. And that was creating problems for the insurance companies. A few have gone under because of this approach to insurance. Insurance. So what we have done is to adopt the risk-based supervisory system, where you risk profile a company. You look at the company and look at the risk that the insurance company, which is a regulated entity, is exposed to. Then as a regulator, you come out with your own interventions as to how to help this company, so that you don't waste resources on companies that are doing well, insurance companies that are sound financially and are able to meet their obligations. You rather concentrate on those who are high risk, companies that have solvency problems, they are underwriting poorly, they are not managing their credits well, bad investments. So you go in there and tell them, look, you need to do this, do that, so that you will be financially sound. It's not about obeying the rules that we've set. That's the compliance approach.
Right.
So that is the system that we have adopted, at least for a number of the developing countries in Africa. Some of us have. Today I saw a ranking of some companies in Africa that have gone that way, and we are about 10. And I'm happy to say that what was displayed, that in ranking, Ghana was 6, and you find South Africa 9, Kenya 8 or something, and there are some that haven't gone risk-based at all. I don't know about the story in Zambia, whether they have gone risk-based, but I believe for bringing some of us here, they want to learn from us what we have achieved. We have not fully, arrived yet, but we are on our way, and that has helped. Right. So that is the risk-based supervision approach that we are adopting.
All right. Now, Ms. Bawa, we were chatting before we started the program, and we were talking about one key challenge that we are also facing here in Zambia. We're talking about being able to provide the policy, being able to provide cover on credit basis. Tell us your experience in Ghana.
Okay. Now, the essence of buying insurance, to protect the risk. And then I was very happy with the team that bounced it back. And that is what we do as insurers to people who buy insurance policies from us. When they have experienced losses or misfortune, we help them to bounce back. So what I see is that the Zambian insurance industry wants to bounce back. And in Ghana and in most jurisdictions, what we have learned is that the penetration level is so low as far as insurance is concerned. A very important segment of our economy or population is underserved as far as insurance is concerned. And one of the reasons is lack of confidence and trust in the insurance industry. People think that we just take their premiums or their monies, and when there's a claim, then we start reading the fine lines in our policies that, oh, for this reason we are not paying. But what we also realized was that in Ghana, even when there were legitimate claims, the insurance companies were not able to meet their obligations. Why? Because they were selling on credit. So they had liquidity issues. So as a market, we came together, the regulatory authority and the association, like the IAZ, we have the equivalent, the GIA in Ghana. We came together to find a solution to this problem. And one was to tackle the credit management. So we decided that from the 1st of April 2014, no company would sell insurance on credit. It's cash and carry, you pay upfront. And then we also agreed that if you violate this policy, there will be a penalty. So the insurance company, not the policyholder, if you sold on credit, you pay 10 times the amount of premium that you should have collected. And why did we agree on this? Just to make the insurance companies viable, and then they should be resourced enough to be able to meet claims. So there will be no excuse for not paying a legitimate claim if you have taken the premium. And I say legitimate claim. So, and we also, after implementing this policy, we then agreed on claims management. We issued a claims management guideline, which says that once you are liable for a particular claim, you must pay the claim within a certain period. Otherwise, there will again be penalties, because some would deliberately delay the claim. So you will have no excuse. You have the money, you are legally liable for the claim, so you pay within a certain period.
But what was the response from the insurers and from the market?
You see, surprisingly, when we were discussing the idea, it was the insurers who were, and the brokers, oh, this won't work, because they had done this over sold on credit. Oh, they come there, you see, they rather had sympathy for the policyholder. Oh, they won't have the money. Some of the premiums are huge. And the argument is, if the premiums are huge, the liability is also huge. So if it occurs, the event for which you have offered cover occurs, you will be called upon to pay that huge amount of what you claim. So what's the argument about the premium? The bigger the premium, the bigger the risk. So take the premium, invest it, so that when there's a claim, you are able to pay. You see. And
for the larger clients like government?
We didn't have a problem. The larger clients, yes. Surprisingly, my fear was I'll get a backlash from the insuring public. But I didn't. They are complying. They themselves will come and say, oh, now we know that we have to find the money. Oh, now we know that we have to budget for insurance. Surprisingly, even for government. I remember at one point there was a risk, and they said, oh, this is, I said, well, they came to me, the insurer, the underwriter on that particular risk came and said, oh, this one, they said they don't have the money. I said, oh, fine, but I'm not going to waive for this, I'm not going to give any concessions, because if we did, it would defeat the policy. And surprisingly, the money, they found the premium. I'm paid. And so that is the experience in Ghana now. Everybody, if you don't have it, because they know that if the regulator finds out, and we have been empowered by the market to implement and monitor and apply the sanctions. So and we got a few companies that we exacted a penalty from them, and the word went round that, hey, and we sent mystery shoppers out to go out and try to buy insurance on credit. So if you do, we get you. And we also had the problem of, I don't know about the Zambian market, but in Ghana, the brokers were collecting the premiums on behalf of the insurance companies. So the check will be written in the name of the broker. So the broker now invests the premium until such time that they are comfortable enough to pass it on. But the broker does not carry any risk, it's the insurance company. So we also issued a directive that no premium or no check should be written in the name of the broker. And we also issued another directive that the brokers live on commission. So as soon as you take the premium, you pay them their commission within a certain period.
So, coming out of this insurance conference 2017, what are the biggest lessons that you want to leave with us? What are the two biggest lessons you want to leave with us?
That the insurance market, we need to regain the confidence of the insuring public by paying our claims and paying them promptly. And that at the point of sale, we should explain the policy to the policy or prospective purchaser so that they understand what they are buying. We don't do that. I don't know about Zambia, but most often we don't. We just give them the policy, and then the understanding is that, oh, we have given, they should read. But they don't understand what they are buying. Explain to them, let them appreciate what they are buying. If they have questions, let them ask. Don't wait till the point at the point of claim that you now start, oh, you see, we didn't cover this, we didn't cover this, we didn't cover this. Because now one of the, what they call it, new developments in insurance and in fact in the financials is that you should treat customers fairly. So let them understand at the point of sale what they are buying, especially in our market where, I mean, on our continent where the literacy rate is so low. Try and explain, let them understand what they are purchasing, so that when there's a claim, there will be no arguments about, whose responsibility is what. And then again, we need to sanitize the market, and that is what we've sought to do in Ghana. Sanitize the market, let a fair playing field for the underwriters, the brokers, the reinsurers, everybody who is involved, the agents, and let them understand their responsibilities to the insuring public. Get them to meet their responsibilities. So we have a complaints bureau. I don't know whether you have, but we have, which is under the auspices of the regulatory authority. So that if you have any concern about any insurance contract or any insurance company, you come to us. And then we would look at it and see what we can do to help you as a policyholder. So I pray, and it's our hope that people prefer, if we ask young people coming up or who have graduated, where do you want to? Oh, I want to work in the bank. They never think about insurance, but this is a very noble profession, and we want to make it attractive and also gain some respectability in our various jurisdictions that we do. We are not just there as thieves to collect premiums, and then when there's a claim, we start reading the fine lines.
Well, you're watching Business Venture Exchange Africa, powered by IAZ, and we were privileged to have on the program right now the Commissioner of Insurance coming all the way from Ghana and West Africa, and that is Mrs. Lydia Bawa, who was giving us key lessons on the regulatory framework that we need to learn as Zambia and a region in insurance. I'm Faith Chitulangoma. Thank you for watching.